Elon Musk, the enigmatic billionaire behind Tesla and SpaceX, has always had a polarizing presence in the tech world, but his growing obsession with Twitter has reached a point where it is no longer just a quirky character trait. It's now a major risk to the financial health of Tesla and its shareholders. When Musk acquired Twitter in 2022 for $44 billion, many investors initially believed it was just another impulsive move, one that might distract him temporarily but ultimately wouldn't impact Tesla's operations. They were wrong. What followed was a bizarre rollercoaster of tweets, controversial policy decisions, late-night Twitter polls, and a growing pattern of erratic behavior that began to erode investor confidence. Musk began treating Twitter like his personal sandbox, making unfiltered statements, promoting conspiracy theories, engaging in petty online feuds, and doubling down on polarizing political views. What once appeared to be eccentric genius slowly started looking more like a liability. Tesla stock, once considered untouchable, began to show cracks. Analysts pointed out that Musk's attention seemed divided, that his public image was becoming toxic, and that his antics on Twitter were turning away institutional investors who once championed Tesla's mission. The irony is palpable. The man who built Tesla into a trillion-dollar company with a bold vision for the future was now risking that same company's credibility and market value by live-tweeting memes at 3 a.m. One key incident was Musk's public feud with a disabled former Twitter employee, which not only sparked backlash across the corporate world but also led to concerns about his leadership temperament. It wasn't just a PR disaster, it was a red flag. Meanwhile, Tesla's quarterly performance started to suffer. Deliveries were missing projections, profit margins were narrowing, and competition in the EV market was heating up from legacy automakers like Ford and GM. But rather than refocus on Tesla's fundamentals, Musk was busy debating pronouns, attacking journalists, and pushing unmoderated free speech to the edge. Many longtime Tesla supporters began to question whether Musk was still the visionary they once trusted. Cathie Wood, once a vocal Tesla bull, started trimming positions. Retail investors who idolized Musk now felt confused, torn between loyalty to the man and concern for their portfolios. Wall Street took notice too. Analysts revised their price targets downward, citing reputational risk and CEO distraction. The very mention of Elon Musk's name in financial circles was no longer just about innovation and disruption, it was about unpredictability and instability. Meanwhile, internal morale at Tesla was reportedly slipping. Engineers and executives found it difficult to get face time with Musk, who seemed more engaged in moderation debates and blue checkmark controversies than in product timelines or battery innovation. One anonymous source claimed it felt like the CEO had checked out of Tesla, and this sentiment echoed louder with each viral tweet. Tesla's stock price, which had once soared past $400, began its descent. Investors watched in real time as billions were wiped off the company's market cap following Musk's most controversial posts. One tweet could swing the share price by 5% or more, creating a volatile environment that resembled a meme stock more than a blue-chip automaker. Major shareholders urged Musk to appoint a Twitter CEO and return focus to Tesla, but he doubled down, stating that Twitter is a public town square and essential to democracy. Critics argued that democracy didn't pay Tesla's bills. To make matters worse, Musk began selling billions in Tesla shares to fund Twitter's operations, further shaking investor confidence. Each sale sent Tesla shares lower, raising questions about whether Tesla was being used as a piggy bank to prop up Musk's new pet project. On earnings calls, Musk's usual confidence sounded increasingly defensive. He promised new breakthroughs, teased unannounced products, and blamed macroeconomic factors for Tesla's underperformance, but the elephant in the room was always Twitter. Institutional investors began applying what they called a Musk discount to Tesla's valuation, meaning they were now pricing in risk associated specifically with his behavior. This discount widened as Musk promoted questionable content, reinstated banned accounts, and inserted himself into geopolitical conflicts via Twitter. For a CEO of a public company, this level of unfiltered engagement was unprecedented and deeply concerning. Employees at Tesla, SpaceX, and even Neuralink were reportedly growing frustrated with the shifting priorities and chaotic leadership style. Anonymous leaks from within Tesla described a culture of confusion and anxiety, with some staffers claiming their emails were going unanswered for weeks. Tesla's board, criticized for being passive, appeared unwilling or unable to rein Musk in. Despite calls from major shareholders for oversight, the board remained silent, perhaps fearing retribution or believing that Musk's brand was still worth protecting. Meanwhile, competition surged ahead. Rivian, Lucid, and Chinese EV manufacturers gained market share. Tesla's once unquestioned dominance was slipping, and with Musk distracted, product delays became more common. Cybertruck remained in limbo, the Semi had limited rollout, and software issues persisted in full self-driving. The market noticed. As Tesla missed targets, its valuation began to decouple from its fundamentals. Musk's online behavior began to be cited in SEC filings as a risk factor. Tesla, once the darling of ESG investing, was now being dropped from sustainability indexes due to Musk's actions. Some former Tesla superfans turned against him. YouTube creators, Reddit communities, and Twitter users, ironically the very platforms Musk used to build his personal brand, started voicing concerns. Even some Tesla employees began posting anonymously about their frustrations. All this culminated in a record-breaking drop in Tesla's share price in late 2023, a period during which Musk's Twitter usage hit an all-time high. Investors were left wondering how a man who once landed rockets vertically was now sinking one of the world's most promising companies with tweets. The story of Elon Musk and Twitter is no longer a sideshow, it's the main event, and it's dragging Tesla along for the ride. The longer Musk stays addicted to Twitter drama, the harder it becomes to argue that Tesla's decline is merely cyclical. With every controversial post, every impulsive pull, and every poorly thought-out reinstatement of extremist accounts, Musk chips away at the public's confidence not just in him, but in the very company that made him a household name. At some point, genius becomes noise, and leadership becomes liability. As Tesla faces increasing competition, tighter margins, and global economic uncertainty, it needs focus and strategic vision more than ever. What it doesn't need is a CEO waging culture wars on social media, arguing with teenagers online, or making memes while the stock drops. The consequences are now painfully visible in Tesla's valuation, in analyst reports, in shareholder meetings, and in the morale of Tesla's once fiercely loyal employee base. While some may continue to defend Musk's Twitter antics as free speech, the financial markets see it differently, a distraction, a liability, a threat to shareholder value. The world is watching, and unless there's a dramatic course correction, the damage might become irreversible. Tesla was built on bold vision and technological leadership. If it fails, it won't be because the world wasn't ready for electric cars, it'll be because its leader couldn't log off. What do you think about this? Let me know in the comments section.